Okay. Market structure. Okay, so today we are going to talk about what we call market structure. So when we say market structure, what should be coming into your head is that structure. Look at how we see body structure, right? And the market structure is going to come in a way that the way we see, like, let's say beautiful lady passing by, and you can be able to see from her top to her bottom, right? So structure means that you are seeing something's shape and how it is moving, right? If she walks like this, you'll be able to know this person is like this, right? If she has big, you're going to say this person is like this, right? So you apply that now into trading, and you leave alone the girls, you focus on now the charts, right? When you open your trading view, what you're going to see is that structure. Now this is what we call market structure. The other one is body structure. You're seeing at the bodies, the person of the body of the person, right? But market structure means that you're seeing how the market is formed, how it is shaped, eh? Yes. And what does that mean? That simply means that now, the moment you put it into like that, you'll be able to see that this market is either going up, this market is all going down, right? So we have three types of structure that we learn basically. That is an uptrend structure, which is always going to go up, right? And then we also have a downtrend structure, which is always going to go down. Then we have that one which is indecisive, which is like in a ranging market, right? So when we say uptrend, we are not saying that it is going up in a straight line, right? The market structure is never going to go in a straight line. Even if it creates those impulsive candles going up, at some point it is going to come back down. It is going to first come back down, then go back up, maybe, right? So that is why we learn this series of, if it is an uptrend market, we are using what we call higher highs and higher lows, right? Because that is an uptrend. An uptrend is never going up in a straight line. At some point it has to come back down. So it is creating higher highs, higher lows, right? So once you put that into your mind, it becomes easy for you to make decisions that if it is an uptrend, I should not do what we call counter trending, right? So you should not be counter trading in a way that you know that this market is going up, but you're saying, let me first get some random sales, right? So if it is an uptrend market, your mind should be like, this is an uptrend. Let me look for what? Let me look for only buys, right? Let me focus on buyers, and because the buyers are in control, right? So it means that if you're trying to sell, yes, you might make money. I'm not saying you cannot make money, but you're trading against the trend, right? There is this saying that the trend is always going to be your friend, right? So if you trade against the trend, that simply means that now you are likely to get stopped out. If I would rather hit stop loss trading as a buyer in an uptrend market than trying to counter trend taking sales, yet it's an uptrend market, right? So once you put that into your mind now, structure becomes easy because that is an uptrend market, right? Then for a downtrend market now, what is happening is that the market is full of sellers, right? The downtrend is full of sellers in a way that they are pushing to the downside, right? You know, when something is expensive, you sell it, right? Yes, so that you can make profit. So the people that sell, what is happening is that they're anticipating that this market is going to the downside. Let me not buy, right? And the reasoning behind it is that if you're to buy, you want to buy something at a cheaper price, right? So that when you sell it at an expensive price so that you can make profits, right? Yes. So that's the same thing as this downtrend market, that people who are selling, they're selling something which is expensive. That's why you see the market is always going to create series of highs, and then people start buying on the highs, and then price pulls back a little bit down, right? And that means that they're going to lose money, right? But if it is a downtrend now, you are not supposed to remember, in a downtrend, price is creating lower lows, lower highs, right? So in that structure, now in your mind, you should be able to understand that this structure, this is a downtrend market, right? Are we together? Eh? It is a downtrend market, and whatever is happening is that I'm looking for sales. That is my first directional bias. I'm looking for sales. I know this is a selling market, despite if there are buyers, or if there are some buyers, right? So I'll find myself looking for sell opportunities. And how do I get those sell opportunities? I'm focusing on lower lows and lower highs, and I'm trying to take trades on the lower highs, because now that is where the market is expensive to sell, right?